Traders from around the world, what's going on? It's Jerremy Alexander Newsome with Real Life Trading. That's all I can really do at this point. I think I just have to let out kind of like a sinister laugh / chuckle. What is going on? Wow, it's phenomenal. It is phenomenal. So you guys might have heard the term that's been thrown around a few times, Bloody Wednesday. From Weiss Research Group. I've also heard of Bloody Friday. Never heard of Bloody Monday. Throwing that one out to Pat Kaufman. It is an incredibly interesting day today. The Dow right now down 578 points. Now keep in mind everything is subject to change due to market volatility, obviously. But we were down much, much lower at some point today. Without question. I mean, we're down almost 800 points, a little over 800 points on the Dow. So we've still recovered 300 points and are down 578. So let me just show you guys some of these candles. And the only thing I can do is my best to correlate this to what day or a day of correlation. Now, first of all, notice this is the candle on the SPY. This is the ETF that tracks the S&P 500. The low of today, give me 1 second. Based on the data that I have, is the low of today was 182.40. The high of today was 195.84, which means on the SPY we have had literally about a 13-point move, almost 8% of the stock's normal range was traded today. This, in my opinion, as far as the only research I've had the opportunity to do today, has marked today about the same volatility, roughly, on the majority of the markets as October 10th, 2008, which I don't know if you guys remember, but was one of the most bearish days in 2008. So I'm here to simply say that the market, as I mentioned Friday, I am officially bearish. We did gap down. We were very, very extended. So as you guys know, if you hop over to Real Life Trading or subscribe to any of that really cool free education, this is a retest gap. So the stock gapped down, traded to a support, had really the majority of the move happened in the first 10 minutes of the market. So check this out. This is the 5-minute chart. So here's your 5-minute chart. Opened, huge sell-off, huge rally. I'm talking massive swings in the first really 15 minutes of the market. And there was some reports that was out there that said the New York Stock Exchange was going to shut down trading, which still theoretically could happen today if the sell-off was going to continue. So this little rally right here, this little rally, brief rally, was just a retest. And let's go back to the daily chart and kind of just talk about the sentiment, if you will, of these candles. Because if you just turn off the candles and you look at just the line, you really don't get a solid perspective of what this looks like. So if we come here to the candlestick chart, notice you got a black candle, black candle, black candle, black candle for the last 4 days. So these black candles are created by selling pressure. So when SPY gapped down this morning, all of the traders who were bearish started to buy to cover, locking in some of their bearish profit. Now, also at the same time, a lot of traders who were long a bunch of stocks got their stops hit early in the morning, so they sold. Which caused the move down. Then the buying came in, which was buying to cover, which drove the stock up. And then later today, people who didn't sell were probably the ones who began to jump ship as the SPY was up at 190, higher than 195. So traders were saying, okay, well, we got a little bit of a rest, a little bit of a bounce, so I'm going to go ahead and just jump ship. Well, what's interesting to take this analysis and understand this candle, since we still have about 45 minutes left to trade this thing, my overall thoughts and intentions are going to be this. I do not think we take out the low of this candle for a while. Yes, I am still kind of more or less bearish, but I don't think we really take out the low of this candle. Tomorrow, depending on how we gap, I think we could trade in the opposite direction of the gap. So if we gap down, it's probably my thought tomorrow is we probably gap down a little bit. I think we gap down tomorrow and get bought up again. If we gap up tomorrow, I think we trade down a little bit. So that's kind of my thought process. We definitely, man, I almost might put my career on this one. Almost 100% chance we get an inside day candle tomorrow. If we don't, I would be blown away, because how could you not get an inside day candle with that kind of range? So bottom line, guys and girls, a lot of volatility out there in the market. Crazy, 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 intense, insane moves. A lot of things going on. The market did trade up. It did roll over. It did rest at some point, and we're catching some of that action with some of our bearish day trades for sure on the market in general. But again, let's just what I'm gonna do is I'm gonna go to 2008 SPY, the Spiders 2008 in just a moment. Just kind of show you what we're looking at or what I'm looking at for just a moment. So give me 1 second, and let's just look at this viewpoint, if you will, and I'll just do a line chart for simplicity's sake. So here's a sell-off. This is a support around 187, which was actually my target 1. My target 2 on the SPY is 156, in case you're wondering. So I'm thinking a little bit of a bounce, a little bit of a rotation, and then likely a rollover at this point. So now that we got this support, here's a support. Here's a potential head, which would be a head and shoulders. And if this bounces, which I think it does a little bit, rests, comes up, and comes back to here, we will have an incredible head and shoulders pattern. This head and shoulders pattern, if that actually happens, type of pattern would make 2007, 2008 look like a child's plaything in regards to the size of the head and shoulders pattern. So this kind of volatility is really expected because of how high the markets are at this exact moment in time. And really, it's just kind of a sight to behold. So let me hop over to 2008 just to show you where, and Brad Reed made this correlation earlier, but I think is a very, very good facet of where we're at. And I like taking prior information that we've received and just kind of helping me understand a little bit about what the future could do. So if we had to look at the SPY back in 2008, the stock moved from 155 to 140 and some change at about the same time. So this was August 16th. August 16th, 2007. This is August 24th. August 16th, we gapped down. Okay, after a pretty big sell-off, we gapped down. Big, huge white candle, giant lower shadow, massive volume. And it gaps down to a prior support that was pretty far away. So that's what we did today. We gapped down, got a giant lower candle, pretty decent white-sized candle with a lot of volume, lower shadow, out of decent support. So what I'm saying is, yes, we theoretically could make it back up to the old resistance of where we were at. I don't think that happens, but we absolutely could. So I would say there's a 50% chance we either are relatively or correlated closely to that type of price action or this type of price action. You know what? I'm actually going to go ahead and just come out and say this is probably 65% and this is probably 35% more of where we're located. Give you guys an idea of what I'm looking at, what I expect the market to do. So this is another example of breaking a very, very, very strong support, which we haven't theoretically done yet, right? This was actually a healthy correction that the SPY had in 2007. This was a little bit bigger, obviously, but it broke some very, very strong support. So anyway, gap down below a strong support, had some white candles come in, and then we trade a little bit higher over time, boom, 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 and then finally rolled over. So either way, bottom line, I guess what I'm trying to go after is saying I do think that we bounce here just a little bit in some form or fashion with that kind of volume. I would anticipate it. Something like this, we could go as high as 201 and then roll back over. It's not going to be the cleanest rollover you'll ever see in your life. But at this point, if it does start to bounce, I think the sell-off happens so quickly that a lot of traders or a lot of people who wanted to cash out their IRAs or 401ks or whatever and didn't, they will probably get one final opportunity. And if they see that opportunity, I think they might take it, which really could cause that rollover. And again, if that's the head and shoulders that we get, something like this, we really could be looking at a much, much larger retracement than potentially anticipated. I mean, we're talking some 60, 70%. I mean, it could be massive. So just something to keep in mind. I'm not here to preach doom and gloom. In all honesty, I mean, we could form this pattern, form this, and we could do this. I mean, this is a possibility. I wouldn't expect that, but it is possible. So again, I'm not saying the Dow's going to go zero. I'm not saying the economy's done or finished by any means. What I definitely am saying is there's a lot of volatility. Good chance we're going to have a high wave candle tomorrow. And if we gap down, I think we trade up. If we gap up, I think we trade down. And, I'm looking to short back up into around 200 to 202. If we make it back up to there, I'll look for some type of rollover in the general market. So that's the DIA. That's the SPY. Here's the DIA. Giant lower candle, huge upper candle, insane massive volume, much, much higher than anything anticipated. If and when we do break this low on the DIA, that's going to be the move. That is the move right there. Once we start breaking that low, where you should really, really perk up and see what the markets are doing. Because if the Dow breaks about 15,000 or the DIA breaks about 150, there's going to be some issues going on. And I don't think it happens tomorrow. I will say, in the 3% chance that we open below the low of today, if that happens, they're going to shut down the markets. The amount of selling that's going to happen, they're going to pause the markets, which was very, very close to happening today. Very close for them to shut down the markets today. Honestly, that came within an hour or two of happening. If the stock didn't bounce or the markets didn't bounce, they would have shut down the market. But the volatility today, really, truly, if you traded the markets today, it was one of the most volatile days since 2008, probably since 1987, and probably since the Great Depression. I mean, this is a day that will go down in history as one of the most volatile, large days ever. So it's fascinating to be trading and seeing this history unfold right in front of our eyes. What was beautiful is, yes, there are some bullish positions out there that did get punched right in the face, but the good news is a lot of the bullish positions that some of people might be in were offset by our swing trades. We had a bearish swing trade on Fitbit. We had a target about here, and it opened way, 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 way below that. So Fitbit, Alibaba traded to a target today, below a target on the gap down. Sprouts Farmers Market gap down below a target today. Twitter gap down. As you can see, the target was actually 22.33. So I have still the analysis on this one. This is the one that we talked about for a while. So we still have, the good news is, a lot of traders out there who made some serious coinage today when the market did gap down. A good buddy of mine, he's over there in Europe, he's in Switzerland. Shout out to Orchin, who said that he had the opportunity on some of his Alibaba and Twitter puts to pay for his wedding. So as you guys know, he's lucky enough to get married soon. So Orchin, shout out to you, man. Great trade, phenomenal job. Really, really happy for you, brother. So there was some amazing things that happened today. All I will say is September 7th, the market is closed due to Labor Day, so there won't be that many laborers going on September 7th. That was a dumb joke. But anyway, what I'm going for is, if there is a week or a few days that you swing traders might want to take off, it might be this week, because there's going to be a lot of volatility. Day traders are going to be in heaven. But for the swing traders, there's really not going to be a lot out there. And I kind of suggest, based on today's candle and volume, we'll probably slowly bounce a little bit higher, is my guess. And then we probably do roll over a little bit more, make it back to this low, and probably bounce again. That's probably my highest rated percentage chance of what likely will happen in the markets. The swing trades, not a lot's going to be happening for the next few weeks, I don't think, as far as setups go, unless they're going to be really, really aggressive. So my swing traders just kind of relax a little bit and take it easy. I do want to share with you a really quick text message that I received this weekend while I was whitewater rafting, and it's from a good buddy of mine. I've been trading with him and helping him and just chatting with him for years now. Let me go see if I can find his text message. Boop, 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 boop. There it is. Okay, so 8:31 p.m. on Friday, he says, "Wow, what a day. I'm so glad you made that video a few weeks ago. Will my 401k be okay? And you said people between 40 and 60 should consider taking some off the table because the market was at a top. At about 90% of my 401k in an S&P 500 index fund. Took your advice and moved that fund all to cash. Dude, you saved me a lot of money. Thank you. Thank you." So we made the video at Real Life Trading back on this day. When was that day? August 11th. And just gave the profiles in my non-licensed opinion, just technically speaking, what I would do in certain situations and what kind of investor I would be in regards to being in cash or starting to find some stocks that you want to buy the bottom on. So keep in mind, folks, and I will just throw this out there for the contrarian view. We did gap to a lot of supports on a lot of stocks, and we're getting a lot of bullish candles with a lot of bullish volume. Could this be a bottom? Yes, it could. Is it likely? I would say if it's a bottom, we get one more shot at it. So if you like some of the stocks where they opened today, my thought is find some ones that you might want to own and consider, if it happens again, potentially buying there, or at least tiptoeing for my younger traders out there. Buy the dip. If you're, like I mentioned in that one video, if you're younger than 40, don't even worry about it. Just buy the dips. Whatever dips occur, just keep funding. Put a large sum of cash if you can, and just start buying low, selling high, and just let it play out, let it do its thing. And hopefully, our goal is, if we do have a correction, my massive main goal for a lot of my traders is to have as much cash as possible when we have Apple at $55 a share, Netflix at $55 a share, Facebook at $55 a share, stuff like that. This had a massive, massive correction. It'll be a good time to buy. So anyway, just keep in mind that bear markets, ladies and gentlemen, don't last that long. Max, we're looking at the next 1 to 2 years. And then from there, if we are actually in a bearish market, I would say short term, we're confirmed bearish without question. That's why I mentioned on Friday. Long term, for me to just every single trade I look at, I'm considering bearish. It's going to have to break this support. And before it does that, it's going to have to trade up, retest, roll over, break, retest, fail, something like that. And that's going to be a confirmed bearish market for next year or so if that happens. If this rollover occurs, I will be super excited about the next few months. But anyway, ladies and gentlemen, a lot of money-making opportunities out there. But my main concern, my main focus for my traders is be calm and mitigate risk. If you're unsure about what to do, my non-licensed opinion is be in cash. If you're scared or worried, be in cash. Cash is king if you don't know what to do. Store up as much as you can. And when and if you think there's a bottom, or if you like where a stock is trading at, you want to buy it, buy some there. Market's very high. This is a healthy pullback. It's a healthy correction as far as numerically. It's a healthy location. If we bounce, awesome. If we don't, we'll take it from there. We'll see what happens. Ladies and gentlemen, it's been fun trading with you. I'll see you guys Wednesday. And until next time, remember, love life, live life, and trade it.